Hi, my name is Chris Rowe. I've been analyzing and trading stock and options for about 13 years, and I worked on Wall Street managing money for 9 of those years for institutions and for individual investors. Welcome to the Tycoon Report once a week market wrap-up. We decided to put these videos together for you because of the recent market turbulence we've been experiencing. So if you don't really want to watch the stock market because it's too painful to watch sometimes, we put these videos together so that you can take a quick peek at the market summary, and we're going to show you that there's always a bull market somewhere. And in 5 minutes or less after watching this video, you can go back to enjoying your life. Let's take a quick look. The market seems to have gotten hammered today. I'm sure the financial media, when you turn on the television or open up the newspaper, is going to paint a terrible, ugly picture. All 10 economic sectors declined by at least 1%. You can see that the major indices declined by about 2% apiece. Just about every stock on the S&P declined. 95% of stocks on the S&P posted a loss. And the weakness was widespread. The financial sector lost about 3.1%. Here it says 3.52%, but it was 3.1%. And they took the brunt of the selling pressure. And you can see that every single sector was down. So this looks terrible, right? This is today's action. Let's compare that to the last week. You can see, materials, so commodities were getting hammered, and energy you can see is down 1% last week. And if you take a look at the month action, you can see financials just continue to be the laggard that you should focus on if you want to be bearish. But I just want to talk very quickly about today. Today's trading volume was very light, with only 865 million shares changing hands on the New York Stock Exchange. So, it's the lightest trading day of the year. That means that the stock market was not down because of immense selling pressure. It was down because of lack of buyers. So while the financial media tries to program you to think that the market's getting hammered, it really is, it's just giving you a false impression of what's really going on in the stock market. Crude prices gained 56 cents, no big deal. After a choppy session, they closed at about $1.15 per barrel. Let's take a quick look at what happened early in the morning. The existing home sales numbers came out. Existing home sales rose 3.1% month over month compared to June, which was a 2.8% decline. And the economist estimate called for a 1.1% growth. So it actually did better than expecting. The existing home sales are down 13.2% year over year. They have an inventory supply of 11.2 months. And compared to the 2007 average inventory supply of 8.9 months. But the inventory of the homes improved to a 10.6 month supply from 11. This indicates that falling prices are helping to stimulate the demand. I know that might be nice to hear in the short term, but don't get too wrapped up in that story that falling prices are helping to stimulate demand, because this is far from over. Sorry to tell you. Freddie Mac was in the news today. They got a $2 billion debt offering, and that received interest from investors. And shares were up, I think, 31 cents at 5.31. It really wasn't a very big deal. Here's a chart of Freddie Mac. Fannie Mae was also up because of this news. And they were only 2 out of the 3 stocks in, I think, 89 stocks in the financial sector that were up. The other one was bond issuer MBIA. Let's take a quick look at the New York Stock Exchange. New York Stock Exchange, you can see, is down. It looks like it's not really doing anything. It's trading flat for the last 2 months or so. But the reality is that more and more stocks are moving higher and breaking through resistance levels. It just doesn't reflect on the price-weighted New York Stock Exchange. Take a look at the U.S. dollar. You can see that since mid-July, the U.S. dollar has been gaining strength. And, you can see that the RSI shows that it's overbought, but you don't want to get bearish on the U.S. dollar again until this overbought territory moves below 70. And since you had such a sharp gain in the U.S. dollar, you might see the RSI reverse down below 70 and then move up above 70 again before generating a nice sell signal there for you. So I'll update that in the Tycoon Report as you read it daily. Here's XLB. This is just the ETF that tracks the S&P materials sector, and you can see that since about May of this year, the materials sector has been declining. And that's because of the strong dollar, which has been leaning on commodity prices, because commodity prices are priced in the U.S. dollar. If you remember, in April, May, I started telling you that the U.S. dollar would start to gain strength, and that would really nail commodity prices. We've seen that happen. And that's really adding strength to the stock market. And the strength you can't see, but it's actually occurring. Read tomorrow's Tycoon Report, and you'll see what I'm talking about. Read last week's Tycoon Report even better, and you'll see what I'm talking about. Anyway, let's just get right down to it. There's always a bull market somewhere, and since we're talking about financials getting absolutely hammered, and since I know a lot of you out there like to hedge your positions, you might have some bullish positions out there, but you might be taking some bearish bets. SKF. Now, SKF is the ultra short financial ETF, and what that means is it basically corresponds to twice the inverse of the daily performance of the Dow Jones U.S. Financial Index. So whatever the Dow Jones U.S. Financial Index does, this is going to do the opposite times 2. So if the financial index is down 10%, this is going to go up 20%. And you can see that since 2007, financials have been getting killed, which has sent this ETF straight up, and it's traded up a couple 100%. And you can see it recently traded up near 210, pulled all the way back to about 110. Now it's up near 125 again. So it might be a good time to start looking at this. I think that we're going to see a little bit more of a bullish rally. Again, it's been hard to see just by looking at the Dow and the S&P, but we are actually seeing lots and lots of stocks break out to the upside. It's just hidden for reasons that I've gotten into in the past. SKF, I think, starts to rock again. The financial mess is not over. You might start nibbling at it here. It's down. You can see every time it came down to this 40-week moving average, it rocketed right back up. So take a look at this. Again, this is not a buy recommendation to get into it right now, but this is definitely something that I would look at for bearish bets if you are going to be taking them. And that's it. I hope that you had a fun time watching this 5-minute video. It's probably gone on to about 6 or 7 minutes because I've been a blabbermouth today. I want you to go back to enjoying your life. Don't even bother looking at the stock market if you're not going to be trading it, because it'll only drive you crazy. And I'll talk to you next Monday afternoon. I'll give you a quick update. And that's it. Take care.